following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Richard Bach. To bring anything into your life, imagine that it's already there. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 50, NASDAQ up 56, S&P's up 11.5. Gold contract down $3.60, traded at $1,143 an ounce. Silver down 7 cents at $14.97 an ounce. Platinum down 11 at $10.10 an ounce. Copper flat at $2.52 a pound. Light sweet crude off 46 cents. Trading at $50.95 a barrel. Bonds, you have the 10-year down 6 ticks, 126.05. 30-year up 17, 151.12. Both the 10 and the 30, folks, had rejected lower price once again. 30 goes topside, 10's trying to go topside. Bottom line, bonds want higher price, lower yield. King dollar up 511 ticks, trading out at 97.79. The euro down 73 at 108, and the yen up 36 at 124.13. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, you have the NASDAQ that's breaking out, folks. SPY, thus far, is running for these highs. Volume contracting once again. You know, the high in the SPY is 213.78. You're at 212.04. You've hit 212.19. Volume right out here is 66 million. You're going into, take a choice, 165 million, 124 million, 202 million was on the downdraft on the 29th. Bottom line is that it doesn't have the juice. You know, we'll see how this ends up coming into the close out here. If we take a look at the futures for a second, what you're going to see inside the E-mini futures is that, excuse me, the futures, what we've had all day is this. Each and every time this little baby tries to get up into a higher spot, a higher price point, you have an operator coming in here selling them. And each sell is pretty dramatic on the way down. We're at 21.14. I suspect when we're going to close out here, we're going to do about a 21.10. So we'll see where that shakes out. It's going to be really intriguing watching this because the divergence that we have out here today is this, folks, is that Europe was up big. And our markets, right from the get-go, just are not basically, you know, the S&P hasn't broken topside. The Dow hasn't. NASDAQ has. We'll see how that defeat comes out after the close, but the NASDAQ definitely has. You had the FTSE up 0.6%. The DAX was up 1.5%. So it's unusual when our markets can't follow that up, particularly because they are at highs. NDX 100. So let's go over and take a look at the NDX 100. NDX 100 right now, the composite's not at a high yet. The NDX 100 is. So what do we have inside the NDX 100? The three Qs. I've done 18 million shares. You're at 111.73, and 111.16 was the high. So the further you get away from the top of that consolidation, because the top of that consolidation started in March. So the further you get away from it, the better chance the NDX would have that it can really basically take off from this point. I don't expect it will, but price-wise, that's what's going on. Inside the NDX 100, this is what we have, the strength. The strength out here is Netflix. Netflix is trading up $18 at 116. We have, let's see, Stericycle is up $5. You have eBay is up $2. Taken away from it, on the way down, Garmin is down $3.47. You have Clack down $2.54. That's quite a hit by Clack. AMAT's off 71 cents, and Lam Research is down $2.26. We go take a look at the IWM, the Russell 2000. Russell 2000 still has no strength. The Russell 2000 is the weakest index out there. It hasn't been able to get into the downdraft that had been out there from the 29th. The high of the 29th is 127.04. We've hit 126.74. You're going to do 22 million shares today. That's going into 49 million. Just not enough juice to get it up and over. Inside the Dow Industrials, the strength versus the weakness inside the Dow Industrials, this is what you have. You have Microsoft as the strength. That's up 81 cents. Big Blue's next, up 224 at 170. Apple is up 166 at 128. And you have DuPont up 69 at 59. Taken away from it, you have McDonald's down $1.13. Goldman Sachs is off 224. United Health is down $1.10, and you got Home Depot down 94 cents. Gold contract. We go over to the gold contract. Whacking the gold contract again. Guess what? They can't basically crack it down in an extraordinary way. We got down to a price point out here today of $11.40. Your swing point that you're going into is 1143.50, and it's hard to believe, but we actually are above that. We're at 1144.10. You came down there with 16,000 contracts thus far. That's going into 179,000 contracts. So bottom line, I suspect, yeah, it can get tested again, but you know what? There's not enough sellers down into the gold market. We certainly don't have buyers, but we don't have sellers. If you go over to the GLD, and we take a look at the GLD is also screaming that, guess what, there's not enough sellers out here to crack this baby lower. 3.5 million shares. We are at 109.78, and the last low that was out here was 8.9 million shares, as well as 12 million shares. So you can see that correlation. I like that correlation, meaning that you're coming into lows, you have lighter volume. Thus far, you've rejected that price. Bottom line, though, what do we need? We need buyers. Bonds. We go take a look at the bond market, and this is just absolutely wild. You know, you get Janet Yellen is out there. She's yelling, screaming, all of the above. She's in the Senate today, saying, bottom line, rates are going to be going up this year. And in that same context, though, what has happened is that she's absolutely saying that rates are going up, and they want to be careful not to tighten it too late, and that would be a risk of overreaching. But in that same token, she's talking out of the other side of her mouth also, saying that they want to make sure that they don't go too soon also. Dow Industrials. She sounds like Alan Greenspan. That's the bottom line, folks. Dow up 54, NASDAQ up 56, S&P's up 11.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 57. You get the Nasdaq up 58. S&Ps are up 11.5. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. And don't forget, folks, Andy has a great show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. As soon as my show ends, get it right on your cell phone, tfnn.mobi. That'll get you all the audio. You want to get Tiger TV, just go to tfnn.com, hit the banner on the right-hand side. Andy also has a great newsletter. It's the Technomento Commodity Report. You can come over to our website right now, test drive it, 30 days, absolutely free. Go to newsletters on the front. Trading newsletters, you see the Technomento Commodity Report right there. Andy Heck, what's going on?
Hey there, Tom. What's going on today? How are you?
Are you frying eggs out in Las Vegas or what, man, on the sidewalk?
It's not that bad. It's only about 102 today. That's good. That's good.
That's not bad, man. Yeah, I mean, because you push 115 like right now, right?
Yeah. A couple of weeks ago. Last week it was really hot, but today it's okay.
Yeah,
not bad.
Cool.
Not bad.
Cool.
But the temperature's rising in these commodity markets, I got to tell you.
Yeah?
Lots of stuff going on. I have a couple of new recommendations out in today's Technomento Commodity Report.
Okay.
Mostly in the ag space, which is the only place I find anything bullish these days. Certainly gold. I got to tell you, I'm thinking. I think. Look, we're going to test this 1135 level. And if it doesn't hold, it could get very ugly very quickly. The action in silver and platinum over the last couple of days, and now palladium, these things are melting. I mean, these metals are slowly dribbling and melting. So we'll have to wait and see exactly what happens here. But the thing that's concerning me about gold, and I'll put the chart up here.
Okay.
If you notice, we have been going down lately on rising open interest. So we're up to about 470,000 contracts in gold. The all-time high is well over 600,000. On a technical basis, what I've noticed over the years is that lower price with rising open interest is generally a bearish sign. And I don't like to see these strong bearish signs technically when we are approaching key support, which is right here. Well, let me go to a daily chart. At the let me go to the daily chart. At the 1135 level, which is the November lows, we're less than $10 above there now. So kind of scary here in gold. could be very interesting in the weeks ahead. Now, having said that, every time that gold has gone to the highs this year, it's failed. Every time it's gone to the lows, it's failed. This time, we'll see. The dollar is kind of telling us that that the whole commodity market is a bit in trouble here.
Yeah, I mean, I'm on the other side of that, but my take on it is that, when you get to lows like this, man, I mean, they should have been able to bust it down. And they haven't been able to. So, we'll see where that shakes out. The dollar index, to me, is a counter-trend bounce, and it's weak, I mean, thus far today, when you take a look at this, if we pull this index up, let me just look at this for a second. So, DXU5. So, thus far, you get 36,000. 36,000 contract. 38,000 is going into 54,000 right now. So
Yeah, no, I see that on a technical basis. My view of the dollar is based on one thing today. They just poured billions and billions of dollars into a country that can't pay it back. That means, and the euro is more than 50% of that dollar index. So fundamentally, that tells me dollar's going to parity against the euro. And eventually, the euro should go to a discount against the dollar. That's my fundamental take on it.
Listen, there's no doubt that the Ponzi scheme is on in an incredible way. I guess if I've learned anything, though, over the years, the Ponzi scheme and all these deals, fiat currency has been on and will continue to be on. Do you know what I mean? So.
No, I know what you mean. I just think that, and I agree. Same same Ponzi schemes on in the dollar. However, the Ponzi scheme in Europe is much worse than the one in the dollar.
Oh, it is. It is. There's no doubt, man. There's no doubt.
And parity ain't that far away. 8.84 big figures.
No, it's not. It's not.
Right. It's a very easy thing to achieve. Let's talk about something more positive here. Let's talk about cotton, because I'm really interested in cotton. I like cotton here, Tom. I love the way
65 cents, right? Okay.
All right, so let's remember, back in 2011, $2.27.
Yeah.
So a quarter the price, pretty much. You got this day chart. Look at this sucker. You got higher highs and higher lows all throughout.
It's pretty.
2015. It's pretty. Can this thing get up to 70, 80 cents in a heartbeat?
Easy,
really easy.
Right.
So I'm really, really liking this thing.
And what happens with cotton, folks, just so you can understand, you put up $1,430 and it's $500 a point, a penny. Yeah.
So I like that one. And I'm also starting to like sugar. I'm liking sugar.
I was looking at sugar today, man. Sugar was hit today, but I was looking at that today, man. Yeah. So we're $12, 12 cents a pound, right?
Yeah. $12.20. I actually was really glad it was hit today, because I put out a buy recommendation yesterday night in the Technical Commodity Report for certain products, and it just got everyone to get in a little bit cheaper here. I like the action in sugar here, and I think the potential for El Nino, even if it doesn't come, will cause some nervousness, and there is so much room in sugar. Sugar was 36 cents a pound in 2011. It's 1/3 the price. So I am looking for bargains, for contrarian.
I think I'm going to have to start trading sugar again. If you trade the futures, folks, okay, sugar is a great trade. Well, let's put it this way. We're not on the right side of it. But I like trading sugar, man. I haven't traded it in years, man.
No, it's good. 112,000 pounds a contract.
Yeah.
And let's just look at it. Right now, sugar closed tonight at what, 12.21?
Yeah.
One contract of sugar. The total value of one contract of sugar is only $13,675.
Right.
So that's a beautiful thing, I mean, that's a lot of leverage and a very small amount,
I know.
Hey, worst comes to worst, you buy a contract, you take delivery, you get 112,000 pounds. Oh. You're good for the next 50 years.
And what happens if you do trade it, folks? Okay, it moves in bursts. Just so you know, when the opening and the closing come, that's how it moves. Yeah, right.
Oh, and Tom, when it starts to move, There's nothing that moves like it.
I did, you know, what happened is that I got one of the runs. This is years ago, and it was beautiful, man. And then I just moved on to something else. Do you know what I mean? But when it moves, and it's you know, it's nice to trade. There's no doubt about that.
Absolutely. It's a volatile commodity. Coffee, the same thing. You know, that's pretty cheap here. Come down below $1.30 a pound. I just think that we are extending to the downside in a lot of these ags. And you know what? Commodity prices are moving lower, and I can understand that. And there's a lot of commodities out there I don't want to touch on the long side here these days, particularly in the metals world with China and the stronger dollar. But the issue for me with the ags, where I'm finding the needles in the haystack here, are these things are so sold down and so low that, hey, a weather event, the downside's limited, the upside's explosive. That's why I like them.
Yeah, no, I can say there's no doubt. We all got to eat, man. There's no two ways about that.
Risk reward, man. The risk reward favors a lot of these beaten down agricultural commodities.
Hey, just hang with us a second, all right?
Sure, absolutely.
Andy Heck, Tom O'Brien, we appreciate you out here growling and prowling with us, folks. Dow right now is up 58. Nasdaq's up 58. S&Ps are up 11.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 66. You get the Nasdaq up 61. S&Ps are up 12.5. And after the close out here, Google's going to be the number, folks. And when you take a look at Google, you know, it's pretty amazing. Excuse me, folks. What Google has done in the last 5 days. Google has gone from a price point of 541 to 596 in 5 trading days. So how they and what Google will do when Google comes out with numbers, they come out with numbers 1 split second after 4 o'clock. So that number is going to be fast, furious, and all of the above. We're talking with our man, Mr. Andy Heck. And, of course, Andy has a great show every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right here, right after me. And we are talking commodities right now.
So let's talk oil, Tom.
Oh, oil, yeah.
You know, they came out of the woodwork again today. I heard the calls for $30 a barrel oil.
Okay.
Which causes me to look the other way. I think the whole thing with the Iran, everyone's focusing on this Iran deal. I think it's de minimis. I don't think a lot more oil is going to surface into the market. I also think that the potential for problems in the Middle East goes up with this deal. That's just personal opinion. But what I am seeing today is I'm seeing oil down 50 cents. All right. But what I'm seeing is oil products doing very well. You have gasoline up 5 cents. The crack spread's back up just under $29. That's a positive sign because consumers don't buy raw oil. They buy raw oil products. And we have seen that the product prices have been doing well, even with oil weak. And that eventually translates back into the demand for the raw crude oil. So I think there's a lot going on in oil. I don't see it running away on the upside here, but I also think that below 50, it's a scale down buy. I do not think we will see new lows below $42 a barrel in 2015, certainly, and maybe even 2016.
Well, I guess you're going to love this, man. So I'm on the other side of you on gold and on oil. I mean, the oil looks to me like it's an ABC structure on the way down. We've done 190,000 contracts today. You're going into 157. You break that baby. You break that 50.95, which teetering out. That's 145 oil. So this is going to be intriguing. And in that same context, I guess, this is where what gets interesting just for both of us, right? Is that the dollar, of course, dictates commodities, oil, and gold, okay? So there's divergence, right? Do you know what I mean? In itself. I'm thinking, okay, that gold wants to go higher, oil wants to go lower, so there's divergence. There's no two ways about that.
A lot of divergence. I mean, I know my opinion of gold and oil is certainly not consistent with my opinion of the dollar.
No, and I'm saying the same thing. No, I'm exactly. I'm just on the other side, but I'm saying the same thing because as I'm talking, it's like, okay, well, this gets interesting, man. You know.
Right. I just think that the oil has halved in price from last year, and this. I look at so many other things. Oil is so many moving parts. The market structure in oil tells us so much. Now, the contango is coming back fast and furious. I just do not see a 30 handle on oil in this day and age with the population, the demographics out there, and the fact that oil is such an important energy commodity these days, and we haven't migrated to other energy commodities yet enough to really trash the price of oil.
Yeah, no. Listen, I hear you. I guess when you look at the XLE, it's pretty intense, though. You know, between Chevron and ExxonMobil, man, it's like, okay, why the heck are they down over 22 to 25% off their highs, and they look like they want to go lower? You know.
But the one thing I always look at, Tom, is one explosion in an oil field out in the Middle East, and this thing is off to the races.
Yeah, you're talking about war? You're talking about just an explosion?
No, I'm talking about war. I'm talking about issues in the Middle East. I think that look, the Saudi, there is no it's very well known there is no love lost between the Iranian government and the Saudi government. And
they're not the Saudis aren't going to fight anyone, man.
The Saudis are very worried about the Iranians getting $150 billion of sanctions lifted and designs on, they're no friends of the Saudi royal family. So there's a lot, and there are allies out there. Certainly there are marriages of convenience, I think, that could be created as a result of this agreement. I think it's going to be very interesting. I think the tension in that region is going to rise in the months ahead. So we'll see. Saudis are already fighting the Iranians in Yemen.
Yeah, listen, that's a whole political deal. I think the Saudis have to worry about their own people right in their own country. You know, you can only be gods inside your country for so long. But anyway.
But you just said it there. It's a political deal. And oil is the most political commodity that trades.
Right, right.
So we'll see what happens.
Totally, man. Totally.
We'll see what happens. We'll see what happens out there. Meanwhile, I mean, other markets, very interesting. You know, it's funny. It's what's today? July 16th.
Yeah.
It should be summer doldrums. We are having no summer this year, really, are we?
No, yeah, you're right. There's no doubt. There's no doubt that there's action. Yeah, right.
There is action. There is action in the markets. There's action in the world. There's a lot of things going on. And, you know, I would imagine that a lot of hedge fund managers this year back in the East Coast are not out in the Hamptons or Cape Cod this summer and glued to their screens. Or if they are, they're glued to their screens in their homes.
Well, there's no doubt that, you know, I think today is like really an important day. The reason being is that, you know, Europe went topside in a big way. NASDAQ Composite went topside. NDX went to new highs. Thus far, you know, that doesn't mean that in the next 20 minutes they're not going to be able to get the S&P up there because they're trying right now. But thus far, that follow-through hasn't come in, you know. So, you know, we'll see where this shakes out after the close. But because of
a lot of nervousness out there.
Yeah. Well, you know, the market's been up, you know, for a long period of time. And what folks, the bullish and bearish sentiment out there, I guess the one thing that is absolutely out there that hasn't been used, and I can see why the bulls say this, okay? No, they can say, hey, listen, this can go a lot higher, is there is a huge amount of cash that's on the sidelines. You know, huge.
Absolutely.
You know,
I saw that. Oh, go ahead. I'm sorry.
And so the bottom line is it on the sidelines for people just to turn around and wait for a better opportunity, or is it on the sidelines and people are going to say, man, I got to put that money to work? So I can see that aspect that, yeah, the bulls can say, hey, this thing can go, you know. So we'll see where it takes.
I saw a very interesting debate yesterday between Fink, the head of Blackstone, and Carl Icahn.
Oh, yeah.
And Icahn said that he thinks that the thing that's going to trigger the next big move in these markets is a disintegration of the high-yield bond market. And you know what? I tend to agree with him.
Oh, I definitely agree with him. Yeah.
And I think that is coming. And you know what? That bodes that's a scary prospect for everything.
So, folks, this is how this works. I talked about this morning, and the high yield market, folks, when there is a market, so pitch this, when there is a market, you have bids and you have offers, and it's a clean market, you know, and that's it. What happens as soon as there's a rate hike at all, the disintegration will happen in the high yield market. Now, what Icahn was talking about with Fink is that because everyone's getting used to trading high-yield CDs right now, okay, it looks like they're liquid. That is not how high-yield runs. I traded high-yield. High-yield,
exactly,
you know, is always hard to buy and hard to sell, period. You know what I mean? Sometimes it takes 3 weeks, folks. Andy, you have a great one and a safe one. We look forward to the show at 5 o'clock.
Thanks, Tom.
Thanks, man. Stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. In New York City, this is going to get interesting watching how this thing shakes out. Because it looks like Uber is going to have, well, they're getting right into the politics of it, too, inside their app. Going against the mayor, de Blasio, and, of course, the whole taxi industry. What seems to, this came up today. So what they've done, along with hailing a cab, Uber riders in New York City can now summon a vision of a future when a car takes 25 minutes to show up. The new feature appears as a button labeled de Blasio at the bottom of the screen. Bottom line, what this is all about is that what they're trying to do right now in New York City is that they're trying to put a bill through that Uber can only grow 1% higher than it is right now. Uber and other on-demand tech companies such as AirKnob are facing pressure from regulators around the world. Some of the companies, including Uber, have routinely used their apps and email lists to solicit support from loyal users. For example, in Broward County, Florida, Uber plans to discontinue service in response to a new rule going into effect July 31st. The company has a page urging residents to write to the county commissioners and display a message to the customers who try to book rides in that area. Officials have adopted rules that make it impossible for Uber to continue operating. That's, bottom line is that I suspect that's going to work because, politicians, vote them out. That's the real bottom line. As we come into the closeout here, volume-wise, this is what we have happening in the NYSE. NYSE is running out today at it'll do about 725 million. We did 769 yesterday. Inside the NASDAQ, what you have in the NASDAQ's going to do about 1.8 billion. The SPYs, what we have inside the SPYs right now at 80 million, so they'll do about 100 million. That 100 million is going into some monster volume. It's going into 124, 165, and the NDX 100, which has broken out, that is going to do about 25 million, and last time we were up here, it did 31. So all those indices, they just can't keep higher price. Google's going to be the number, and if we do bring up Google, I mean, Google really looks strong, actually. If we bring up Google and take a look at this, it is not only where it has this. This is where Google has the shot. So, you've gone from 539 to 595. If we put this on a monthly basis, what you're going to see is that the monthly is much weaker, but the price spread this month is pretty incredible. You know, it's a $60 price spread. So Google is what is going to basically, you know, be pushing around, I suspect, the NDX 100 after the close out here today. Because we got Google, you got Schlumberger, SLB. So Schlumberger, that's been down off the high at 95, you're at 84. No big deal there. AMD and Advanced Micro, that's at $1.88. And as our man, Mr. David White, was saying yesterday when Intel was coming out, in Intel's numbers, they had 99% of the server market, folks. 99. That's insane. AMD is breaking lows today, and it's breaking lows with volume. So if we put this on a weekly basis, my God, I have to put it on a monthly. I got to go back quite a way. So check this out. This is going to be wild watching this AMD shake out. This is why. So AMD is at 188. I can put this back. Man, oh man. You know what? AMD better save itself today, because it looks to me that, so we're at 188, and you go under this 181 and AMD's going to be on its way out of business. Man, that's intense. Mattel is also coming out with numbers. Mattel's closed. Mattel is trading at a price point of $25.17. What does she look like? So Mattel's off the highs of 30, off that high with volume. Yeah, you know, Mattel actually doesn't look bad. Mattel looks like this is what you have with Mattel. Mattel has been in a downdraft for a long period of time. The high was December of 2013, $47. Goes straight down to April of 22, and then it has a small sign of strength. Gets up to 30. If Mattel can get back into tonight like $23, $22, and if you can do that with light volume, that wouldn't be a bad setup to turn around and take a look at it and see if, in fact, it might be a buy at that particular point. We go take a look at Walmart. We had Walmart and Amazon, folks. They're fighting it out in the retail space in an incredible way. There's no doubt about that. Now, Walmart didn't get any movement out here. The Walmart, it continues to teeter at that 70 point, we're at 73 right now, but it's teetering at that 70.36 area, because that 70.25 area is where you get the breakdown and break into the lower range that it took 12 years to get out of. Okay, so that's pretty intense. Now, Amazon, AMZN, let's see when Amazon's going to come out with numbers. Amazon is up $13.35 today. Let's see. That's the 23rd. So that's coming out the 23rd. And, you know, Amazon had that big sale out here yesterday. Gross-wise, they did 13% of the, no, they did 200% higher than they normally do on a trading day. You know, don't forget, at TFNN, we broadcast 10 hours of live content every day. We start at 8 o'clock in the morning, go to 6 in the afternoon. You know, John Logan kicks us off in the morning. Our man, Mr. Steve Rhodes, is out there from 1 to 2. He changed how he's set up. And if you haven't test drove Steve's newsletter yet, folks, okay, come on over to our website. You can go into newsletters. You can test drive it right here, right now. And if you've listened to Steve, you know, Steve was calling for a bottom out here last week. And, you know, bottom line is that this certainly was a little explosion off, if you take a look at this S&P, you know, the SPY's at 212, that was at 204. So check it out right on the front page of TFNN. Coming into the close, let's see what we got. So some of the high volume stocks in this low volume market, Bank of America. Oh, this is interesting. Bank of America, Bank of America is printing money too, no doubt. But what you have with Bank of America, so check this out. This is going to be, this looks like a three-gap play. So what happens with a three-gap play is this. Yeah, it's pretty substantial. A three-gap play, most of the time, goes like this. Yeah, it's a three-gap play. You do three gaps, you come back and fill them. Then, wherever the gaps actually do start, that's where you basically go back topside again. So it'll be interesting watching how this baby does shake out, because we're at 1794, and those lows of 1650 more likely going to get tested once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow up 67, Nasdaq up 61, S&P's up 13. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have Marvell is up 45 cents. You get Boeing up $1.59. Citigroup is up $2. The Honeywell is down 45. You get IBM up 239. JP Morgan is up 35 cents. Let's go over and we'll take a look at the XLF in general. All those financials. There she is. Come on, baby. XLF right now is trading out at 25.44. It's broken over the top of its consolidation. Let's see what we have. So Okay, so the last highs up here in the XLF, we had... this is going to be wild. This whole thing is going to be wild about the breakouts, folks, and can they hold price? And if they hold price, how long they're going to hold price? And is it a true breakout? This is why. These are the XLF. XLF is trading at $25.44. It's been in a consolidation since December of 2014. That's what it's breaking out of right now. That consolidation at these highs on a weekly basis was pushing 237 million shares and 200 million shares. This breakout is going to be on approximately 170 million. We're at 136 right now, and I'm pushing in another 30 tomorrow. You know, we'll see how that shakes out coming into it. We know you can break out, no doubt, on lighter volume. Bottom line, though, is that when you do that, it's just a matter of when you're going to be back inside that range. So we'll see how that whole baby does shake out. The NDX 100, inside the NDX 100, the driver inside that baby. Oh, hey, let's go to the IBB, because the IBB had big strength out here yesterday. This is the biotech index. Now, this index no doubt drives the NASDAQ composite. The composite hasn't hit a new high yet, but it's right next to it. The IBB's up $4.56 today, $3.95. This is right at its highs from yesterday. The high of yesterday, it had opened yesterday at $3.93. It sold down to $3.90, big deal, after going up to $3.96. You know, you're pushing into that today. You have a little bit lighter volume. Now, inside the IBB, that's been all the biotechs taking over each other. Their numbers don't come out until like the end of the month. You know, if you take a look at Amgen, let's see, Amgen comes out on the 30th. Celgene, CELG, that comes out on the 23rd. Well, the 23rd is next Wednesday, I believe. Biogen comes out the 24th. REGN comes out August 4th. You can see many of them are later in the cycle. Gilead, which is the largest weighting, that comes out the 28th. So the IBB absolutely has a little bit longer before the actual fundamentals are going to come out on it to see if, in fact, there's any drive behind the numbers versus just the drive behind the takeover aspect. There's no doubt about it that inside the biotech industry, the amount of money that they can charge for drugs, that is what's driving the industry. I mean, when you look at some of these numbers, it's a big number. And what does happen, and if I've seen anything, when you have pricing power, true pricing power goes like those drug companies. There's no two ways about it. And the reason is this, is that it's a third party that's always paying it. The insurance companies are paying it. When you have a third party paying the bills, folks, it's always runaway pricing, okay? Because no one's watching the store. This is Tom O'Brien. This is TFNN. You stay right there, folks. Going to have a lot of numbers coming back. The first one, of course, being Google. Google will be coming out flat out as soon as 4 o'clock and 1 tick. It'll be out. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on gurus. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up 70, NASDAQ up 64, S&P's up 13.5, gold contract down $3.60, trading at $1,143 an ounce. Silver down 8 cents at $14.96 an ounce. Platinum down 11 at $10.10 an ounce. Light sweet crude off 43 cents at $50.98 a barrel. Bonds, you have the 10-year down 5 ticks, 126.05. 30 up 16, 151.11. They both want higher price, lower yield. King dollar up 511 ticks at 97.79. The euro down 74 at 108, and the yen up 37 at 124.14. Our phone number is 877-927-6648. Let's call, folks. Want to know what's going on in your world? Now let's go over to the world of Google, because Google just came out with numbers. Google closed at 601. It's trading at 644. This is how the numbers go on Google. The estimate was $6.73. They made $6.99. I believe the gross numbers are down, which is kind of intriguing. The cost per click was down 5.1%. The paid clicks, however, were up 14.1%. Bottom line is that what you have is this. Google is trading 644, and what you're going to see there, if we put this on a monthly basis, if Google does get this volume tomorrow, and in fact you're still at these levels, that Google is going to go after a B point of a very large ABC on the way up. 615.03 on a monthly basis is the B point. 40 million shares is the number. You know, we're at 23 million right now, so depending on how Google attacks, price-wise, Google has it right now. There's no two ways about it. We'll see if, in fact, it comes through volume tomorrow, and if in fact that price holds. But bottom line is that, and if it does, it's going to be pretty amazing, because this was definitely what does happen. ABC structures on the way up or the way down are straight line moves, and Google had a straight line move when it started. October of 2013, Google was at 421. Runs up to 615. That's almost a straight line move. The largest straight line move actually is going all the way back to July of 2012. That was 281, and that 281 took you to 315. So what are we talking there? That's 335 points. That'll get you, my God, that'll get you about an 800 Google. So bottom line is that if that baby does get over there tomorrow with volume, there's real juice behind the move. Let's go over and take a look at the SPY, the S&P. With the markets up so dramatic, SPY still hasn't been able to get in, up, and over these highs. And it does have a contraction of volume. We'll see how this shakes out tomorrow. The SPY was up $1.66. We're at 212.27. The high is 213.78. Bottom line, we'll see if it can make it up there tomorrow. The NDX 100 did break out this morning. The 3 Qs closed at a price point of 111.94. Right now you're trading at 112.21 because, of course, with the NDX 100, you have Google putting juice into that NDX 100. That the high that it was taken out is 111.16. And it didn't take it out with volume, but price-wise, no doubt that you're going to see more expansion out here tomorrow morning if, in fact, Google holds overnight as they get into this conference call. The small caps, what do we have with the small caps? Small caps still can't handle it. Small caps going into the downdraft that was created out there on the 29th, and, no traction. So the 29th, folks, of June on the small caps, the high there is 127.07. We hit 126.74 today. Just can't handle it. Can't handle the price. Can't handle the volume. Can't handle all of the above. So that's pretty wild watching that shake out. In particular, watching it shake out when You have the NDX 100 breaking out, and in Europe today, the divergence out here today, and certainly in the S&P and the Dow, was that you had Europe strong all day long, and in our markets, the only thing we had strong was the NASDAQ. If you take a look at the Dow Industrials trading out at 18,120. Bottom line, you get the highs up here of 351. Not that that's a long way. It certainly isn't a long way. Gold contract. What do we have with gold now? Check it out. So we're going to be committed to a Friday. Always dangerous in the gold market. They haven't been able to spike gold into lower price. There's no doubt that you've had a continual downdraft in gold in the last 3 months. We've just gone from 1220 to 1143. Each and every last 5 or 6 days, they've tried to spike it into the lows, and bottom line, each and every day you have lighter volume, and it keeps rejecting that lower price. We need buyers in the market, no doubt. We closed out today at 1143.70. It got as low as 1140.60. The spike low that's out there on the March 17th area is 1143.50. So it got under that, closed above it. That's saying, once again, bottom line is that, it's rejecting lower price. Now what do we need? Bottom line, you need volume coming in the market with price in order to get to higher price. If we go take a look at the bond market, this is pretty wild watching this bond market. So if I put up the 30-year, when you see this is just amazing. Bonds absolutely refuse to die. 30-year right now is at 151.10. It's been building cause since the lows that were established in June. And the yield wants to go lower, bonds want to go higher. We go over to the 10-year, we take a look at the 10-year, same type of setup inside the 10-year. And I guess the key is going to be, why are folks still piling into this? My take is that, of course, money is coming out of, money wants to be safe, let's put it that way. 10-year, right now at 126.05. Wants to go to 127, more than like it's going to go to 130. The yield on the 10-year right now is 2.354. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back with some more numbers for you. Dow Industrials up 70, NASDAQ up 64, S&P's up 12.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 70, S&P's up 12.5, NASDAQ up 16. And as we do each and every Thursday at 20 past the second hour, we have our man, Mr. Basil Chapman, coming up. And don't forget, folks, Basil has an outstanding show every trading day right here, 11 to 12 Eastern Standard Time. You can get that show right on your cell phone, TFNN.mobi, any place in the world. Now, coming up this July 20th, if you come over to our website at TFNN, you're going to see right in the front page, right in the carousel, Basil Chapman's follows up his popular 1920 webinars. What that is, we'll let Basil explain what that's all about. Now, you can get into this webinar, folks, if you're a subscriber to his opening call. You can be a subscriber to his opening call by test driving the newsletter. 30 days absolutely free. You can go over to our website at TFNN. Bottom line, hit the button. You can test drive it. 30 days free. You like it, you keep it. Bottom line, that gets you into the webinar, which is going to be coming up on July 20th. It's going to go from 5:30 to 6:30 Eastern Standard Time. And what also happens, if in fact you can't make it for some reason, no problem. Our technology will put it right on your page. You'll be able to keep it there 30 days and watch it as many times as you'd like. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day?
Yes, thank you.
So how's the weather up in Boston? What's happening up there?
It's beautiful. This is perfect weather, really. Actually, there's very little humidity right now, and that's great.
That's awesome, man. What would you like to talk about first, Basil?
Well, I'm just going to show this chart because it pertains in a certain way to what I'll be talking about Monday.
Okay.
And we've been talking about the Dow essentially having, let me move this over to the side. I've got the Dow daily chart, which I show my subscribers to the opening call. Having been, essentially, it's been in a trading band for most of the year.
Yes.
And basically, it's traded between 17,500. The core was 17,600 to 18,100. We've gone a little above that and a little bit below it. And now what we're doing is we are continuing this rotational correction where some of the sectors, I'll just quickly show this, we have been short the SMHs, we're still a little bit short. That's the semiconductor market vector semiconductor ETF. And look how poorly it's performed. Whereas there are other sectors that have been highly favorable to, unfortunately, we just missed getting back in. And that was like the financials. So what I'll be talking about is what happens when you take a long sideways consolidation? Is there a chance that instead of having the usual 15 to 20% correction before having another big move to the upside, we've used up time rather than price, and the Dow essentially is just getting ready for a big move. But what really happens in this particular chart pattern is that it goes to the bottom of the support level,
yes,
and then like a yo-yo, it just takes its time and bounces right back and goes to the top, and then it continues that. And I always like to say a rectangle formation in the market, whether it's a short term or an intermediate term, can last a lot longer than your patience. So we'll be looking, because this was a good candle today after the candle yesterday, and that essentially says that at 18,120, if the Dow was to go into the 18,190s, you've got to expect there's a real good chance, especially with the MACD going to 80%, that you can go towards the top of the band, and the all-time high was 18,351. So let me show you this on the weekly, and this is basically what I'm going to be talking about. I'm going to be looking at all the different indices, and for those of us who have been in the market a long time, you know that what happens in markets is that bottoms, like in March of 2009, there's this cluster formation that within days, virtually all the indices make a low.
Okay.
But at tops, it doesn't always work that way. Remember, March of 2000 was the S&P high with the NASDAQ, but the Dow had already made its high in January.
January 14th, right.
Exactly. And what's really important about that is to know that you can roll towards the top. So we've seen a nice breakout to a new high in the QQQs. The IWM, which I believe you had mentioned earlier, IWM is stalling here. It hasn't gotten back. It's only at about a 50% retracement, and so is the New York Stock Exchange. So what I'm trying to put together is this is the time that we're going to look a lot more at the charts, but at the same time, I'm going to reintroduce all those aspects that were really familiar in the late 1920s. I mean, there was prohibition, there was jazz, there were a whole bunch of, I call them socio-economic political situations. And we are, do you know, Tom, that in Boston, there are 7 to 8 new skyscrapers that are on the drawing boards. When last did you see skyscrapers in Boston?
Oh, listen, man, I was there a couple weeks ago, and there's no doubt. And in fact, you know, I had, you know, for folks across the country, I grew up in South Boston, and South Boston is one of the biggest gentrifications that have probably ever happened in the country.
Do you recognize it? Do you even recognize it?
Oh, I know every doorknob there. There's no doubt about that. But
there's a lot of change.
The recognition has to do with that. You know, you have one floors going for, you know, basically $700, $800 million when you could buy a whole house even 30 years ago for $60,000, you know, so.
Right, exactly right. And now what's also important, and did you go along the Turnpike? Did you see the new Nike building?
I did.
That's a beautiful work of art. But they're allowing buildings of the size that they had.
Well, you know what is also, what blew my mind up there more than anything, though, is that the traffic was worse than New York City. That's what really blew my mind. I mean, it's like...
The traffic's gone. And can you imagine what's going to happen when the skyscrapers are up?
No, you're trapped like rats, man.
Right. So I'm going to be talking about the fact that the air rights have been given away, that they had kept sacred. They wouldn't allow any air rights before. Now they're allowing air rights over the Turnpike.
Yeah.
A whole bunch of things. And this is what city government does when you're getting to major market tops. And we're going to be looking at that. It's not to say that it's going to happen now or in 6 months' time, but this is the period that you've got to be looking at the parallels and what the consequences are and how we're going to deal with them. So it's going to be a fascinating webinar, and I think that people will get a lot of information out of it that they'll be able to track almost on a daily basis.
Now, where do you have the NDX 100?
So the NDX 100, if I can go to the QQQ, because that's the trading vehicle.
Yeah.
So
Same
the
thing.
QQQ needed to break above 111.16.
Okay.
I had a parallel wave count. So now in the daily chart is in E/A. E means it could be very negative. A means it's very positive. I don't like to have that confusion. The moment the stochastic gets to 80%, and right now it's at 78%, that'll confirm that any pullback will allow a couple more legs to the upside in the daily charts. But the weekly chart changes notation. It's now in the leg D. That's what we always look for. That's where you've got to start being a little bit careful. And the monthly chart is in the leg D. But what's really interesting is, if I open this up, you'll see that the technicals, there's a big divergence between the failing technicals and the price moving higher. So that essentially says, don't be afraid of the move up now that we've gone to the new highs, but now you've got to start looking out to see where there's a failure to continue the up move in the weekly chart, because if the MACD starts to diverge and starts to break down, That's going to suggest that this move will not last. But what's very important is the monthly chart. Look at this monthly chart. It's walking the 9-period exponential moving average, but you can see here that the MACD is starting to slow down. In fact, it's almost crossed negative, and the stochastic's still good at 90%, but way lower than it was. So these are the divergences we've got to be aware of. You don't have to do anything yet about it, but you've got to be aware of them. So the breakout today is actually a positive, and we'll see how far it can go. But there's a divergence between the different indices.
And folks, you can sign up for Basil's newsletter and the webinar right in that front page of TFNN. Basil, thanks so much. Have a great one. Have a safe one.
You too, Tom.
Come right back,
Great
folks.
opportunity to diversify your financial portfolio. Consider the principal protected market safe CD from Everbank. They've just released the second running of their 5-year market safe power metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 70, Nasdaq up 64, S&P's up 12.5. Google is the number, no doubt, after the close out here. It closed out at the 604. It's trading at 648 right now. Schlumberger, SLB. So Schlumberger, of course, is a large oil service company. Schlumberger closed at $83.89. This is trading out at 85.10 right now. This has been in basically a small downdraft from 94. Numbers go like this in Schlumberger. Let's go take a look at them. So their revenue was $9 billion. Earning, imagine $9 billion in 90 days. It's pretty amazing. $1 billion, well, that's not $1 billion a day, but $3 billion a month. 88 cents was the earnings per share. They, let's see, the earnings per share did top estimates. The revenue, however, came down. So Schlumberger, the world's largest provider of oil field services, said profit fell as tumbling crude prices hurt its North American energy business. Second quarter net income declined to 1.12 billion, or 88 cents a share, from 1.8 billion, or 137 a year earlier. Excluding one-time costs, per share result was 9 cents more than the 79-cent average of 37 analyst estimates. The major areas that collapsed the most for everyone has been the North American markets. We think North American is in a bottoming process right now. Exploration and production companies are expected to cut spending by more than $100 billion. They're definitely going to, the oil business is not even done cutting, folks. It's not even close, because when you look at these numbers are dramatic, that you're talking about these large integrated oils, what they're doing now versus what they were doing 2 years ago. If you take a look at ExxonMobil, ExxonMobil looks to do $67 billion every 90 days right now. They were doing $124 billion. Chevron, imagine taking that. That's a haircut. Chevron, excuse me, folks. Chevron right now is doing $34 billion a quarter. That was doing $58 a quarter. We go to SLB, Schlumberger, the one we were just talking about. Schlumberger right now is doing $9 billion a quarter. That wasn't as bad. They were doing $10.4 a quarter. So bottom line is that though they definitely are doing less. If we do take a look at Schlumberger, we put Schlumberger on a longer-term basis. SLB, certainly not a buy. What SLB, what Schlumberger has done, you bring this back a bit. We're at $85 right now. It closed at 83. Schlumberger is off its high from like 118. The counter trend bounce that it actually did, bring this back a bit, and what you're going to see, 2014, where is she? She's right there. Yeah, you're going to see she come off the high. She did a nice bounce up to 95, gave it up. That 95 was going into the downdraft of November of 2014. That was pretty vicious. That's where we came down from 99 to 83, fast, furious, all of the above. And that is when oil also got tanked in an extraordinary way. The way the oil market is set up right now, and this is going into the weekend here, is going to basically tell us a lot inside this oil market, because what we have with oil right now is this. The oil contract out here today, CLQ5. Put this on a daily for a second. The oil contract did 300,000 contracts. We're down 51 cents. This leg down has just taken us from $64 to $50. What oil's going to try to do tomorrow morning, folks, is go into its swing low. Now, it has a swing low that was established on July 7th. We're only 30 cents away from it, 20 cents away from it. No, 30 cents, 31 cents to be exact. We have volume of 527,000 contracts there. If you break that with volume, that is a very large ABC structure on the way down that will take you into the $45 area if that's a one-to-one ABC structure on the way down. So that's going to be pretty intense watching this whole thing shake out. What has happened is that the oil and gas, XLE, Chevrons of the world, Exxons of the world have been stating that oil wants lower price. Now, let's go to unleaded gas. We take a look at unleaded gas, gasoline that we use, not what you have with unleaded gas, is that today that was up 3 pennies. XBU5. Okay. So this had 40,000 contracts traded. This, let me pull this baby up. Yeah, this is still in the lower range. So 184.40. At 184.40, this is saying this is also wants to get down to 163. So this is going to be interesting watching this shake out, because what we also have on a fundamental basis, as the summer, bottom line, we're July 15th, July 16th right now. summer trading, summer driving certainly has, good another 30 days, 40 days. But once you get into August, kids are going back to school. Depending where you are, kids go back to school August 15th, August 16th in Florida. They're going to go back to school in the Northeast, September 5th, September 6th. That sets up, 169 unleaded gas, and there's no doubt that puts huge amounts of money into all our pockets and puts it in there pretty quickly too. What it also does simultaneously, however, is that it takes it out of the large integrated oils. Let's go over to Goldman Sachs. So Goldman Sachs came out with numbers out here today, and where Goldman Sachs couldn't handle it is the inside their numbers. So Goldman Sachs today did down $1.78. Did volume out here of 4.3 million. And what you had with Goldman is the aspect of how much they're spending on legal charges, okay? Their CFO came out and said flat out that they put a huge amount of money aside for the legal charges, but then the CFO says that the legal charges can be absolutely and unpredictable, okay? So it's pretty amazing. Their profits fell 52% to $1.45 billion, but those profits, just so you understand, had to do. They made plenty of money, but inside making that money, the aspect of how much they got to pay on legal costs is huge. So their profit tumbled 49% in the fixed income. Their revenue dropped more than all their rivals, and so check this out. Banks themselves, the legal costs have always been part of doing business. In this particular case, though, this is pretty intense. They rose their litigation cost fivefold. The net income was $1.05 billion, $1.98 a share. Excluding legal costs and accounting adjustments, earnings were $4.49. That beat the average estimate, but the bottom line is that what folks don't like to see, no doubt, is a downdraft in the trading, because that's what Goldman's all about. And when you talk about legal costs that were higher than the last 5 quarters combined, that's saying that, guess what? They haven't been putting the legal costs into their equations. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And don't forget, folks, every Tuesday, Thursday, right here, right now at 5 o'clock Eastern Standard Time, another 20 minutes. Our man, Mr. Andy Heckner's coming up with the Technomento Commodity Report. Bottom line, you can listen to that right on your website, folks, right on your cell phone, TFNN.mobi. Google came out with numbers. They hit the numbers. Bottom line is that we'll see how it plays out in mobile and on YouTube. But it looks like the CFO is out here right now talking, and it's pretty intense because what they're saying is that the watch time on mobile YouTube is up over 200%. And I can see that. You know, what ends up happening if you use YouTube, folks, there's everything that's on YouTube. If you want to learn how to do anything, bottom line, you YouTube it and it's up in about 2 seconds. So it's really intriguing watching this whole thing shake out. What this, and they did some good PR this week, no doubt about this new CFO. What the CFO is absolutely doing, there's no doubt about that, is pulling expenses, pushing expenses down, not let them basically go much higher. And that's where there's no doubt that they start pushing some numbers. Google's second quarter report signals that Ruth Porter's run as the company's CFO, and the results are helping her get off to a good start. The search engine Thursday reported revenue rose 11% to $17.7 billion from a year earlier. With net revenue, a figure that excludes payments to advertising partners, increasing to $14.35 billion. That was above the $14.28 billion projected by analysts. Google generated a profit of $6.99 a share compared to $5.98 a year ago, and above the analyst estimates of $6.74. This is a quote now from her. Our strong second quarter results reflect continued growth across the breadth of our products, most notably core search, where mobile stood out, as well as YouTube and programmatic advertising. Investors have, let's see, Google has defended the spending as a sign of optimism both in the core search advertising business, which requires huge sums for things like data centers. Google's business is also changing as people spend more time with mobile phones in many places, including the United States. Google searches on mobile devices now outnumber those on desktop or laptop computers. This, there's no doubt, folks, that what has happened, flat out, is that the amount of use that we get on our cell phones is going up exponentially. You know, when I always talk about go to just on your cell phone, TFNN.mobi. Bottom line is that you get a phone in your pocket, guess what? You can get delivered, you can deliver content. Search capabilities, yeah, it's out there in about 2 seconds, and depending on what type of wireless systems or where you're near, they pull them up fast, furious, and all the above. What is intriguing inside of this, I use my cell phone as a computer quite a bit, but what I've never seen really, and I don't have to deal with it too much, is the ad aspect of it. And it's intriguing because their ad numbers are up. There's no two ways about that. Inside the mobile aspect, So what does happen inside the ad business, now check this out, because this is pretty intense, and out of advertising age, this still comes out, is the large advertisers that, Procter & Gamble's of the world, the Nikes of the world, all the phone companies of the world, these people that have just hundreds of millions of dollars budget inside the advertising world, when these ads are placed on mobile devices and also on computers, right now, advertising age figures that about 30 to 33% of them never get seen, and yet they're paying hundreds of millions of dollars for it. Now, that'll change at some point, but it still hasn't changed, and that's the thing that's amazing to me, just basically being in the media business, being in the advertising business, watching how this shakes out. And what that's about is this. That's about a bureaucracy that's in place saving a bureaucracy. Because the last thing these large advertising companies want to own up to is that, listen, 1 out of 3 ads that you are paying for are never seen. But guess what? They get the bread, and on the cell phone, you just don't see much, but people are doing it. So our phone number is 877-927-6648. Now, let's get overseas and go take a look at the DAX in Germany. So you had the Greece deal get done. That's done. DAX right now is at 11,716. It's the highs on the DAX out here were generated 12,003. So you're about 600 points away from the highs that were generated out here on April. The DAX got up today. We did 66 million shares. That's going into 134 million. So the DAX tomorrow morning is going to be intriguing to watch how this shakes out. The FTSE was the weakest, one of the weakest indices in Europe today. The FTSE just got over the 29th downdraft, which was 67.53. The FTSE, it's intriguing. The FTSE actually looks like our own small caps. For some reason, the small caps can't get going, but what you do have inside these small caps, if we actually bring up the Russell 2000, the actual indice, what you're going to see is that the Russell failed at the 1273 mark. We got to 1275. That's right at the downdraft, too, which is pretty amazing. So the Russell continues in this consolidation. But as our man Basil Chapman said a little bit earlier when he was on, it's going to be intriguing to see rotation-wise if, in fact, the NASDAQ can pull up the S&Ps tomorrow and pull up the Dow Industrials. The Dow has quite a leg to go up. The Dow right now, we're at 18,120. That high out there is, it's not that bad. It's a couple $100. Yeah, $230 is the high. We'll see whether they can get it. It had a shot at it today, and it basically didn't take that shot. What we will have, though, is that you're going to have more Dow stocks coming out with numbers. The NDX 100 certainly is the number. Google, if Google stays where it's at, what you did have out here today is Netflix was up $17. Netflix was the leader inside the NDX 100. Inside the composite, now the composite will open at highs tomorrow. In fact, the composite looks like it's going to jump the creek. So the composite closed right at its high. The high that was generated out here on the 23rd in the NASDAQ composite was 51.63. We talk about jumping the creek. Well, you can jump it on the way up. You can jump it on the way down. The composite, I suspect, is going to jump the creek. What's going to get intriguing here is if, in fact, that's going to be a 3-gap play, because your first gap was generated on the composite between July 10th and July 13th. The second one was today, from yesterday, and I suspect tomorrow you're also going to have a gap up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back, and of course, our man, Mr. Andy Heck, is going to be coming up from 5 to 6. Dow finished up 70, NASDAQ up 64, S&P's up 13. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. We had Caterpillar up 37. Citigroup was up $2. We had Big Blue up $2.47. So let's go over and we take a look at Citigroup. That's an equity that we haven't looked at for no doubt a long time. Citigroup right now trading at a price point of 58.59. You know, this is still a disaster from the way it went down, of course, because this went for a 10-to-1 reverse stock split. This was a $570 stock. Bottom line, though, that being said, what you do have out here today is that this gets over a swing. So let's see what we have here. So on the daily basis, first off, you're over a swing. The retracement was too big to be an ABC up, but you'll still get 57. It was the top. 52 is the bottom, so you add $5 to 57. That day he wants to go to 63. That's the way this is shaken out right now in Citigroup. Still, you know, not. Yeah, hey, listen, it's not a bad deal. I mean, it's pretty amazing when you think of the structure that it did, a 10-for-1 reverse stock split. But bottom line is that now you're getting into higher price. If we go over to Bank of America, BAC, what you had with Bank of America, they came in with some big numbers in their mortgage business. Bank of America also took out a B point, took it out with volume. So the B point it took out was $17.72. Your A point on this is, you know, it's interesting. When you look at some of these charts, it looks like the A point is a long way down. but because it went sideways for so long, the A point is only 15.43. The B is 17.50, so you get $2. The C is 16.22, so you get 18.22 as an ABC structure on the way up, and you're already at 17.95. What Bank of America is going to do, and if it can do it this week, actually, Bank of America, if you own Bank of America, you'd want this to do it not this week, but next week. This is what it is. If you take this and put this on a weekly, this has been a long time consolidation going all the way back to 2013. The high of 2014 rather, March of 2014, is $18.03. You had 575 million shares traded there. And if you can get to the price, it looks to me that next week, not this week, you wouldn't want it to break this week. Next week, it may have a chance to basically get over that level. And if you did get over that level, Bank of America would have some real juice behind it. You know, because what would end up happening is that it can get into the $19 area, and then you'd have some real action, you know. And where Bank of America is getting his traction now is from the aspect of taking over countrywide, and then, of course, paying all the fines. You know, Bank of America has a lot of that out of its way right now. And what does happen inside the mortgage business right now, folks, is that people are trying to get, large investors are trying to buy as many pools of mortgages as they can. The reason being is most of the sour mortgages are gone. What has happened is that the mortgage business out here right now, you know, there's these mortgages that are out here. The real estate has gone back up. The ability of the credit is 10 times better. And so what you have is you have a feeding frenzy right now of large institutions that are, in fact, turning around and buying into this, and that makes them a lot more valuable. There's no two ways about that. You stay right there. Our man, Mr. Andy Heck's going to be coming up, growling and prowling with you. And don't forget, folks, tomorrow morning, 8 o'clock, we start programming. Get it right on your cell phone. John Logan kicks us off. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking here, right here, tomorrow.